On his latest story on Yahoo Finance, Brian Sozzi tells us, quote, investors are emotionally reconnecting with the concept of portfolio diversification. And this, of course, Brian Sozzi has to do with inflation.
Yeah, I wrote that. Actually, I think I did. But yes, this comes compliments of a new UBS investor survey. What they do is they survey really wealthy, rich people that have large amounts of money invested in stocks. And for this particular survey, they are trying to figure out how investors will change their portfolio based on inflation, which, as we just heard from Whirlpool Chairman CEO Mark Bitzer, inflation is hot, baby. So you might want to make some changes to your portfolio here. So in this survey, 31% of those surveys said they will likely add stocks because of accelerating inflation over the next 12 months. That makes sense. If you pick the right stock, definitely that can outperform inflation. They also expect to add cash, even though cash is not that fun in an inflationary environment. 26% plan to add bonds, also not necessarily a great investment opportunity when inflation is at the levels we are seeing today. They also, 25% expect will add precious metals to their portfolio. And 24%, for those high rollers out there, they expect to add real estate as one way to outperform inflation, guys.
What would they be doing differently if there wasn't inflation? I guess they didn't ask them that, but how is this different, right? Would fewer of them be adding stocks, for example? I don't know. I guess UBS didn't ask that.
Yeah, my takeaway was that they would perhaps build up cash during inflation, perhaps paralyzed by the current moment with inflation. They don't necessarily perhaps know where to go, but ultimately it looks like their first instinct is to come in here, add stocks, try to outperform inflation.
I got to say, look, I'm not a wealth manager, nor am I wealthy. But I look at this data, and if you really are worried about inflation and rates are the big thing, you're just supposed to buy as much real estate as possible and lever it up, right? That's the simplest trade that you can make for any level of wealth, let alone being, in UBS's private client group, right? Take out as many mortgages as you're allowed to, pay 3%, probably less on those, and there you go. No issue.
It's one way to beat inflation over the next, not only the 12 months, Myles, it really is longer term. So I guess, to your point, I'll even raise that. Go out and buy some stocks, cash it in, and go buy some mansions.
But but then with stocks, you have the duration risk. They could go down. I mean, they don't go down. Of course, legally, stocks are not allowed to go down. They could go down, but real estate prices, what did Tony Soprano say? Mm-hmm. Buy land, AJ. Not making it. God's not making any more of it. So there you go. All right.